Equity peaks in 3 of our portfolios yesterday, March the 1st. Let's look at the results. Here's the All 78, All Strategy Access up 27K on the month. That means it made 27K yesterday. One of the things you can do to look at the daily P&Ls is go to the Calcs, a tab, and in column DN, these are the daily P&Ls. And you see what's in quite the losing streak right here. When you highlight something like this, you can see the sum of those right down here. So if you see the sum of that, minus 34,000. Let me go over here. So that was minus 34,000, and then plus 27,000 right here, all in one day, getting a lot of the long losing streak back. There was a plus $9,000 day there. It's been choppy at the end of February, and it was tough to trade. Came close to another worst case drawdown, but held. And it's $23,000 away from equity peak. It's gone kind of sideways. Lately, you can see that in the equity curve, and you can see that in the drawdown curve. So that is the All 78. The equity peak strategies, equity peak portfolios are all access shortlist 51. Brand new equity peaks. It was at a 13,825 drawdown yesterday. Hit 14,000 in profits, made a new equity peak. And so the drawdown, the most recent drawdown started, last equity peak was back here. You can scroll back here and see that was on January the 20th. It was at an equity peak, and then it started to go through a drawdown on that date after that trade. And you can see the P&Ls. When you have a 0 here, that means it's an equity peak. And so you can see the P&Ls, and you see these drawdowns, 13, 14, 15. Makes its way back up, and then it hits 16, 538, near worst case drawdown, and then boom, it has a really strong day. And this is what we were talking about yesterday, how there's lots of choppy days. The trend days are fewer, but they're very strong trends, and then the choppy days are choppier. So you get a greater standard deviation of trading system results. You get bigger losing days and bigger winning days when you have those scenarios unfold. And so back to all 70 or the 51 list, 51 plus 7. It made a new worst case drawdown with this volatility. We anticipate that portfolios will make new worst case drawdowns if volatility increases. And so just a slightly new worst case drawdown here, and it's bounced. And so it's in a $3,000 drawdown. Let's look at the daily P&Ls for that. So it made an equity peak here, and that was on February the 18th. So not a long time ago. February 18th made a new equity peak, went through a losing streak, made a worst case drawdown at 25,000, got most of that back in one day. It was in a $25,000 drawdown, made 22,000 in one day. And so that is the way trading is right now. You can see where it is on the year, up 34,921. And let's take a look at the stock index 27. The stock index portfolios have struggled because the stock indexes have been the choppiest market, and they don't have market diversity. You don't have market diversity in these stock indexes. So let's look at, so it's up a little bit on the year, 33.35. Here is the, hasn't had an equity peak since this date, and that was on January the 20th. January 20th was a big trend day. Inauguration day, if you remember. The market decided to trend, and then it has not made an equity peak since. It's made worst case drawdown here, 28,967.50, and then it's come back quite a bit since then. So it's come back about 20,000 from that worst case drawdown, and it's 8,925 away from a new equity peak. So choppy stock indexes. Let's look at the other two portfolios that made equity peaks. Was the 200K portfolio. It's been the most stable. One of the reasons it's been the most stable is trading a lot of SR counter trends, which are hot this year. They struggled last year. We kept them in, and then it only has 3 NASDAQ strategies. So it made a series of equity peaks here. The 200K portfolio did through February the 18th was the last equity peak. And then went through a $11,000 drawdown here, 12,000 almost, and then a new equity peak up 88.80 yesterday. So the P&L wasn't as big as some of these because it did trade less stock indexes. And yesterday was a huge gainer in the stock index strategy. So let's look at the 50K portfolio. New equity peak in the 50K portfolio. Slow start to the year, but is looking strong now. Up 6,400 in February, up 4,460 in March, on March the 1st, up 5,605 on the year. And so it had this December struggle and 52 January struggle. We did the webinar, and we had an older version of this, so it struggled a little bit in Q4. And now we're making some headway. Let's look at the daily P&Ls in the calcs column. So the last equity peak on this one, now this has less strategy, so the cycles can be slower. The last equity peak was way back here in this time frame. This was in October. So since October, it's been a little bit on the slow side. Our COBRA strategies, gap continuation strategies, are the NQ strategies in this portfolio, and those haven't had many big days. They've had losing streaks. But recently we did have some gains in those, and some of the other strategies in this portfolio that were down last year are up this year, and that's why we kept them in there. So brand new equity peaks finally after 44.60 yesterday, a big $3,400 day 4 trading days ago. So the micro stock index portfolio and gold micro stock index and micro gold stock indexes and gold have been choppy. So it's been 3 months. December, January, February down, and then it made a worst case drawdown, and then it bounced about halfway back. Just right here you see that. It made this worst case drawdown, and so it's been challenging to trade the stock indexes with all the chop. There's some chop again today, so it's drawing down a little bit today, but getting in near worst case drawdowns gives you the opportunity to preserve capital and manage risk a little better than getting in at equity peaks. So you see the last equity peaks for this. So it did make a series of equity peaks through February the 8th. So through February the 8th, it was making a series of equity peaks, looking really strong. It made an equity peak here, which was on January the 20th. Let's go back and see. And there was another equity peak here. And there was, so there was about, January the 7th, January the 20th, and February the 18th were the equity peaks in this portfolio. You see the equity peak here, 2, made 3 equity peaks so far this year, and then it went straight to a worst case drawdown right here. This losing streak, massive chop, pandemic level type chop in both stock indexes and gold. And you saw, 34.76 of loss here. 1, 2, 3, 4, 5, 6, 7, 8, 9. 8 out of 9 days were losers. And then a big bounce back here, minus 23.01. 23.01 away from an equity peak now. So we just had an extreme amount of chop. The NASDAQ has a lot of NASDAQ strategies and a lot of gold strategies, and some of these other portfolios that have done better. For example, the 50K portfolio only has 2 NASDAQ strategies. That did put it up yesterday, but it's not a high concentration. The 200K portfolio has 40 strategies and only 3 NASDAQ strategies. So the NASDAQ has been the challenge. Gold has also been a bit challenging. So that's the portfolio calculator updates for through March the 1st to see the equity peaks in the 200K. You see them in the 200K, the 50K, in the All Strategy Access 51 short list. And that's the update for today.